Hi gold traders. In this video, we will take a look at how our forecast prior to yesterday's FOMC events panned out. That will also highlight the use of lower time frame charts in the gold market. Unfortunately, due to the relatively low number of views and lackluster engagement, after our last YouTube video, we decided against uploading a video forecast and posted a two-part analysis for FOMC on Telegram instead. A video would have shown more levels and of course been easier to follow. But our Telegram posts were still helpful, and we will show you how. In one of our recent videos, we stated that the market would begin manipulating price down a number of days prior to FOMC and gave you a level from which that was going to happen. On Thursday, the 12th of this month, price closed just below our identified level, after which gold took a sustained bearish turn to start pricing in a 25 basis point cut. Yesterday, prior to the FOMC events, we posted a two-part forecast that you can go back and refer to, as we also posted it on our free Telegram channel. In the second of those posts, we listed the various FOMC events and identified how the market would react to each of those. We stated the following: despite the market having more or less priced in the expected rate cut, there was still some slack left, which was going to be filled after the releases. Our main takeaway was that the Fed's projections and pronouncements would lead to a manipulation drive down. We also stated where the whipsaw action during the aforementioned events would take place, although we were hoping for price to whipsaw and hit an upper level. We were wary of price being kept down within a tighter range, and that is why we explicitly stated that if price closed below 2,624, we would see price manipulated down further for the remainder of that session. Now let's take a look at the M5 chart up on the screen here for the period encompassing the FOMC events. The reason we went down to a lower time frame is that we use the footprint charts, along with other technical analysis tools, when we need to forensically analyze and tightly focus in on certain types of price action, such as whipsaws, albeit only after having identified the wider context in which price action has been unfolding. Getting back to the chart, this is the candle that opened on the Fed funds rate announcement, and note the clean sweeping move down off the knee-jerk reaction to the announcement. We then had the FOMC economic projections, but take a look at this candle that robustly broke and closed under our 2624 level. The M5 candle range here shows the subsequent whipsaw. And note that price did not break back above 2624 because the manipulators were protecting their territory until they could push price down even further. At this juncture, it's worth pointing out something of note. It is extremely difficult to forecast accurate levels outside of news and volatility, but we not only gave traders a precise level within what was going to be a very volatile period, but one where there was going to be whipsaw action to boot that is nigh on impossible to plan for. Given the extreme volatility and back and forth on momentum-driven news fueling the whipsaw, yet our 2,624 level was the precise point at which the whipsaw action was contained before the continued push down until market close. At the time of this upload, price was taken back up by the smart money from today's market open, but seems to be facing strong resistance at our 2,624 level. Will there be a Santa rally for gold before the holidays? We think we might have the answer, but in order for us to continue producing these videos, please show some engagement by leaving a comment, even if it's simply to say how useful you found the upload. Please also hit the like button, as it shows you are respecting yourselves by respecting those who take the time and effort to provide you with valuable resources. Until next time, take care.